You'd better believe it. I was right about Bitcoin so far. So I've scaled into a position on Bitcoin that might just be the best possible entry point for this entire move. We played the breakout of a parabolic trend and a head and shoulders and confluence that we talked about in the last video. Stay tuned and I'll show you how I achieved such a flawless entry point, and I'll clue you into the fact that it wasn't all smooth from the beginning. So what is the narrative for price this week? Well, the fear and greed index is still neutral, teetering on greed, which shows us how uncertain people have been. This doesn't help much, so let's look at the same breakouts we were trading in the last video. We stay confident because on these breakouts, it's rare that we jump straight down to the price target. Sideways action is usually an area where big money scales into its positions. Now imagine we just got excited on the breakout and went all in with our account right away with high leverage and without much room for a decently placed stop loss. Our entry point would be around 27,100, which is super generous because of how quick the breakout was. And guess what? The price snapped right back up into the head and shoulders, which could have potentially stopped us out. We broke back down slowly, so if we didn't panic when the price broke back up for the first time and we had our emotions in check, a position around 27,150 wouldn't be horrible. Actually, I take that back. It is horrible compared to my entry point. I seriously don't mean to be cocky, but what happened next is a long emotional roller coaster for most traders. If you hopped on the initial breakout, you would officially be in profit right now. If your stop loss or even liquidation point wasn't hit first, because we went down to 25,800, then snapped back up to 27,600, and did that a couple times before breaking back up all the way to 28,400. Surely after seeing the price go in the right direction, people were either adding to their positions or just staying in it with no profit taking at all. Don't do that. I was in that position and I made money just before getting stopped out at break even on the remainder of the position, but I already had made money. Once it hit the stop loss, I didn't give up or let my emotions control my trading. I simply scaled back into the position on the spike up to 28,000, and I regained my entry point at 27,550. So we made money, scaled back in, and now have already taken profits on this new position with the stop loss back at break even. It's easy money as long as you know how to get the killer entry points like me. My main goal when developing this strategy was to eliminate getting my stop loss hit and watching the price go in the direction I was initially trading. So frustrating. So what do I mean by scaling into a position? It might sound confusing, but without mentioning the name of what the actual strategy in this video is, let me explain. Right after you hit that like and subscribe button for more killer entry points. In order to eliminate getting stopped out and having to watch price go in your direction, you simply go in with only a percentage of what you want to trade. So say you're trading with $1,000 hypothetically. You want to get into a position because you see something screaming sell in the charts, and instead of just going in with your full 1,000, you put in 250. Now, you pull a fib retracement from the whole swing move high to the low, and like magic, you have the rest of your entry points. What this does is let you build a stronger position while other people are getting stopped out, or just simply throwing money into the greedy market maker's pocket. None of this video is financial advice, it's just for entertainment purposes. Still, I hope I made this look as easy as it is. I won't stop teaching this strategy until everyone who watches these videos understands. Any questions, just throw them down in the comment section and I'll do my best to help. See you in the next one.